Uncertainty over the Fed Reserve's policy and Trump's tariffs is shaking the markets and keeping investors on edge. Today, for example, the US president stated that a trade deal with China is realistic. To make his opponents more compliant, he added another item to the tariff hike list: lumber. In the short term, there seems to be no end to sign. At the same time, the president's actions are making the Fed Reserve's jump much more complicated. As revealed in the January meeting minutes, all Fed policymakers opted for a wait-and-see approach, a logical decision given the complete uncertainty about how the president's policies will impact the US economy. However, one factor is almost universally agreed upon: any increase in the business costs in the United States will ultimately be imposed on the American consumers. At this point, no one doubts that inflation in the country is on the rise. Therefore, the dollar's pullback today is unlikely to mark the start of a sustained reversal. The greenback owes its strength to global geopolitical uncertainty and strong US economy on its side. As a result, traders may see the dollar indexes decline as an opportunity to buy the American currency. The euro accounts for the bulk in the dollar's basket of the six rival currencies. Over the past few days, it has become evident that European policymakers are struggling to keep up with Donald Trump's initiatives. With the 27 countries, the EU requires time to coordinate a common stance. However, the Eurozone is able to make a prompt mutual decision when necessary. Trump announced auto tariffs on a Thursday, and within a day, the EU signaled its readiness to begin negotiations with the United States, not just on automobiles, but on a grand deal that could cement transatlantic relations. Such prospects, even if quite fragile, have injected some optimism into the euro. Adding to the momentum, ECB board member Isabel Schnabel stated that the rate-cutting cycle may be put on a hold. As a result, the euro steadily climbed today, moving towards its first key resistance level at 1.0450. Further up, resistance levels intensify, with a February 19 high at 1.0461 and the psychological zone between 1.0500 and 1.0505. In a bearish scenario, the critical support level for the euro-dollar lies at 1.0410. A break below this mark could send the price toward the February 6 low at 1.0352. However, in a broader context, these price fluctuations are still happening within a consolidation range of 1.0250 to 1.0500. Only a breakout beyond this range will determine the future trajectory of the euro-dollar pair. By the way, traders expect high volatility in the forex market tomorrow, fueled by a series of key economic data releases. In particular, the world's leading economies will release business activity indexes. For example, in Germany, some forecasts suggest the manufacturing PMI could rise by as much as a half a point, potentially providing support for the euro. For more details on the release times of these and other economic reports, as well as the potential market impact, check out our traders calendar. Oil prices remain caught between opposing forces. Prices are rising on geopolitical tensions in the tariff threats and declining in response to the United States data. Today, for instance, Brent crude retreated from its weekly high, consolidating within the range of $75.70 to $76.50 per barrel. The drop was triggered by the latest weekly inventory report from the U.S. storage facilities. According to the American Petroleum Institute, U.S. crude reserves continue to build up, with a weekly increase of 3.34 million barrels. If this trend is confirmed by official data from the U.S. Department of Energy, It will mark the fourth consecutive week of rising inventories. As a result, oil prices may edge lower toward the end of the week. Analysts reckon that Brent could slip to $75.5 per barrel. Curiously, the Russian ruble is ignoring a decline in oil prices. It's advancing on its own. As a result, the dollar-ruble pair has got stuck below 90, trading within a range of 87.60 to 89.60 rubles per dollar. The ruble's main drivers in recent days have been geopolitical developments. However, another supporting factor is the preparation of exporters for February tax payments, which kick off next week. This means that the bullish trend in the ruble could hold for some time. So that's all for today. We continue to follow developments in the financial markets. Subscribe to the channel and follow news with us. See you!